We found that there was quite a few people that came back to the service that had churned out over the last quarter, and the retention was shockingly strong for the second quarter. But the piece that surprised us the most was that even though there is the recent price increase on all the tiers and pretty significant on the premium tier stickiness and return to the premium tier from perhaps ad tier was quite high. And so what we'll see, I think, in the quarter is not just good subscriber numbers, but really strong ARM. And while they don't give that information anymore specifically, I think they can speak to it generally, and their revenue certainly will show that. And in addition to that, that should translate to really good leverage, great earnings, and free cash flow.
One thing that might surprise people who haven't tried to quit Netflix but have tried to quit cable is that Netflix is really easy to quit, and it's also really easy to subscribe to. And that's something that the company has really tried to make a point of doing in its history. What is it specifically that brought consumers back that churned out over the last year or so?
Yeah, well, what we're seeing primarily is that the people who are churning out and coming back, they're doing so for a relatively short period of time, and they'll come back for the content. Really, over the last year, not including the second quarter, Netflix was plagued with the SAG-AFTRA strikes, the fallout from that, as were the movie theaters and all the studios. Really, there just wasn't a ton of content to go around as productions had been stalled for a while. Now we're seeing in the second quarter, and we should see through the rest of the year and throughout the following year, really good content quality, content volume, and Netflix has so much cash to spend on that. 18 billion is earmarking for the year, likely going even higher next year. They just have plenty to spend on the best content, and that keeps people on the service.
Alicia, you mentioned the quality content. What type of content are they coming back for? When we think about consumers, everyone's really picky about where they want to put their money when we think about all these streaming options. What is Netflix doing that's bringing people back?
Well, they have a few things right now that stand out. One, they had Squid Game that brought back a lot of people. That was really watched more than most shows. And then you have the WWE. I think that has kept people on the service in a way that, other on-demand content can't necessarily, because for the people who watch that, it's live, and it's live every week, and there's a lot of shoulder programming around that. So people who signed on for that or also like that in addition to their normal content, they're going to stay on that service longer and churn out less. Also, you have children's content, family content, and these are, a portion of the population that will watch the same shows over and over and over, same movies, and you just can't really do without if that's something that your kids want to watch. Beyond that, we've seen over the past couple of years now that just having the advertising tier has reduced churn overall. And you've seen that with such phenomenal subscriber numbers over the past couple of years because it limits churn. You just trade down for a little while when you don't have quite as much to watch. Or if you're price sensitive, that's a great place to go. If you're going to be watching a ton, maybe upgrade back to the premium tier.
I remember when there weren't ads on Netflix, but it's good that people have these options, and clearly we're seeing that to be a benefit for the company here. But how big of a growth driver is the ad tier for them?
Well, right. So this past year, what we saw is that, obviously the introduction of the ad tier and the password sharing crackdown were huge drivers for subscribers and just limiting churn overall. So the subscriber numbers were phenomenal. This year, what we expect to see is, the price increases driving that revenue growth as the ad tier continues to move toward accretion. And I think it's toward close to accretion in the North American market, but it has a ways to go in the other markets. But we'll start to see that as we go into 2026. Where there's just better targeting, at least in the UCAN region, you're going to have really significant targeting, so much more programmatic partners, and just options for advertisers that are going to want to be on the Netflix platform. And that should drive accretion and more profitability in 26.